Hello everybody and welcome to the midweek market update from Smack the Markets for the 10th of June. So this week so far we've had risk sentiment switching on and off almost sort of daily, which making it rather sort of challenging for some of these longer term trends and longer term moves. Today we've got the FOMC interest rate decision and accompanying meeting later on, and that's after the European close, and that's likely to be the center of focus for traders through today's trading session. And the results of that, of course, is likely to have ramifications on the markets going into the second half of the week. So let's have a look at a few markets that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we come to the Dow first of all, on Monday the market was looking rather sort of stretched. We were looking for retracements back into sort of structure points and possible sort of continuation of the trend. Now these markets at the moment we're only intraday trading them because of the sort of run that they've had so far, and of course the sort of pending sort of economic impact that is yet to be sort of reported through via the sort of COVID-19 sort of lockdowns. So at the moment here, the market's sort of pulled up. It's just sort of sitting around that sort of 27 sort of 400 price point at the moment. That's an intraday level there on that market, and there is a level up the top here. Well, the round number's 27,500, but the sort of top end here is around 27,550. So we've got some resistance up there, but it would be sort of foolish to think that the market's going to sort of turn at that point, considering how strong these stock markets have been and how much sort of money has been sort of pushed into these to drive these markets up. Like a lot of professional traders, I still think that there is downside risk that is to come on these markets. Now, whether that comes this week, next month, or through into the autumn is another sort of story. But at the moment, we're still looking at opportunities in between these sort of trading windows as the market puts in these sort of structures. Now, of course, just bear in mind, if we have a look at this on the 60-minute chart, you'll see the sort of levels up here that we've got of previous sort of resistance. If the market does fail up here and does roll over, then think about what the chart structure may well look like. We'll have a sort of a double top sort of failure up here as well. So that would be something sort of just to bear in mind. If we come now to gold and take a look at gold here. Now on Monday, what we were looking for was to see if the market was going to sort of fail around the 1.7 level. In fact, if I just sort of zoom out of this, you can see the sort of structure. The market had broken through the sort of structure level here out of this range, pulled back into 1.7. In fact, we're looking for an opportunity for the retracement to 1.7 and a continuation of this sort of trend that's formed here on the 4-hour time frame. This didn't work out, so you can see that the market sort of set up and then sort of continued sort of higher. So precious metals not looking quite so easy at this moment in time. Having said that, the market that we are looking at tentatively here is on the silver market and looking at this more to the long side. Now, as gold and silver have over sort of recent months been sort of formulating sort of separate chart structures and chart patterns, silver here is looking much more sort of bullish, and you can see that the market's been within a long trend here. It's sort of pulled back into the sort of 17,700 area, back into that sort of moving average zone. So at the moment, starting to sort of look a little bit more bullish. There is a not so much sort of strength in the sort of trend formation, but this is the sort of thing that I'm looking at here. If the market can sort of break above this sort of sideways, if we zoom into this, break above the sort of high of these sort of 4-hour candles here in this sort of sideways sort of consolidation, then I think we might start to get a bit of a turning point. And remember that if the market does do this, then that daily time frame is going to start to look much, much more bullish. So then we could be seeing moves up to 1814 in the near term, and then possibly up here to the 1850 area, which is really where I'm sort of looking for the move to go. Now on Monday we looked at Euro Swiss, so let me just come to the Euro Swiss market. Now what we were looking for here on Euro Swiss, if we perhaps take a look at this on the weekly, is easier. What we were looking for here was on Monday the market had broken out above this sort of level. We were looking for retracements and then a continuation move up here towards the 1.1 price point. If I just sort of zoom out, you can see that that's sort of quite a decisive trading window there, and expecting to sort of find a bit of support around the low end of this sort of level. Now that didn't occur. We've had a much deeper retracement, and as I said, a lot of these markets have not sort of been reacting to technically, but more the whole sort of risk sentiment has been switching from positive to negative pretty much every day. So what we've had here now is the market sort of pulled right back underneath that level, and that level is likely to become resistance if the market does sort of find support and the trend continue to move higher. So some of the sort of opportunities that we're more focusing on going into the second half of the week are more sort of centered around the yen markets. Now, we could take a look at things like the Aussie yen or the Kiwi yen here, and this is the sort of thing that I'm looking at. If we have a look at this on the weekly chart, you can see that this market's had huge run already. It has hit this sort of 72 level. It's retraced back into the sort of 70 price point at the moment. That is a level of previous support and resistance, as we can see through here, and looking to see whether the market actually finds support here. If it does, then we may well start to see a push towards that 72 area again. If we come down to the daily time frame, you can see the retracement back into 70. Again, if I just sort of zoom out, you can see this level has been quite significant support and resistance for this market. So looking to see here if we get a turning point. If we do, then we could be seeing for a continuation of this daily trend here on the on that time frame. Come down to the 4-hour time frame, and here you can see that we've just got this sort of consolidation here, sort of starting to form around that 70 price point. So it's starting to look a little bit more bullish here. Now the challenge for today is that the Kiwi and the yen at this moment in time are looking quite strong. So the remains to be seen how this will continue to sort of battle out. We might get some sort of sideways action here, and the decision on this may well be sort of driven by the FOMC sort of news announcement, or after that news announcement later this evening. So there's a few markets there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.